Hello everyone, welcome to e-learning. Now, have you seen a chart that's so beautiful like this? Now, this is quite zoomed. In this, it's just 1 point range for about 3-4 hours of your new job. Was coming, you take some defensive measures, taking decisive profits. Especially, this is just an introduction of what a chop is. Whenever people say that the market is going to be choppy, this is what it means. It means that there will be selling algorithms as well as buying algorithms at the same time, and this is what you get: selling channels and buying channels, the same of course happening all at the same time. So the next time someone says, hey, it's the choppy market, yes, you still can't trade if you can chart these channels and plan your trades accordingly, even if it's a 1 point scope. Now, there are 3 things I want to talk about in this analysis. Now, the first is that even though we were slightly tending up, and I will show you later that we are actually in the buying channel, and we want to be paying attention to this later as we trade. But even though we are trading upwards, I made most of my profits in puts yesterday. I'm going to tell you why, and I also the trade that I took yesterday here that will never lose, and I can relax from 2 p.m. onwards. Now, firstly, let's take a look at trade number 1 that I took here. Now, this trade here, number 1 that I took here, right now you can view it later. Just click on the link on the Discord here. Now, there are a few ways you can enter a trade like that, right? If you see a channel, then we charted this channel in our 1-minute chart here, and we can see some rejection of the yellow here, and I took my trade at 956 right here with my stop loss at high of the day. Now, this is my risk tolerance here, and once it continued downwards, we were planning for this head and shoulder pattern here. So I took some of my profits here, partial profits, to try to protect the trade at about 10 o'clock. Right here, this red candle here, I protected my trade as soon as I could. Once it reached the structure in this large red candle, so I can take some of my profits here, and from my trades is very much protected. And so here comes the parental questions on when do you enter your trade. Now you can see the setup, you can manage your risk. Some people like me, I will enter a trade and I'll set strict stop losses. I will see a certain confirmation before I tighten my stop. So in this case, I take a trade once it breaks through this yellow and this buying channel right here. I set my stops quite strictly here. Now, I'm someone who will recenter trades. I have the conviction on certain structures, so I will enter the trade quite easily with every clear stop losses. I'm going to show you how I stop here in this orange trade here, but it's all right. I re-entered it anyway. If you're slightly more conservative, but it will be slightly more difficult in a choppy day, what you can now do, you can enter a trade once it breaks that structure here. You can enter the trade again once this head and shoulder forming, but by then you have to take your profits. Then now, this is one of the ways of entering a trade, though confirmations, especially if you're not that skilled yet in adjusting your stops. But for me, what do? I try to enter a trade. I have my stops here, and I put my stops really tight, especially once it breaks through certain structures. So I'm looking to see that yellow turns into some sort of resistance here. I enter when it breaks through this buying channel. My stops are as tight as yellow, very tight stops here. Sometimes my stops can be as tight as 0.1 to 0.15 per contract. Now, this is important. I need tight stops because I'm trading quite large contracts, so it's skills according. So as a beginner, maybe you start with 0.3, 0.35, that's fine. If you're just trading 2-3 contracts, 1 contract not, this is just acceptable value. But here we are trading 20 contracts, 30 contracts, 50 contracts. This adds up, right? So you have to slowly fine tune your stops, and that depends also on good entry. So if I were to enter puts, for example, I would enter in this green candle here. This green candle, if I could, I would enter into this green candle and put my stops at this end of the top wick here, or wait till it breaks through this yellow, and I would adjust my stops even more closely, right, with this yellow as resistance. So this is with assumption, right? If we were waiting for some sort of rejection of this level, breaking off this buying channel and forming the head and shoulder pattern right here. So I protected my trade here, and therefore I adjust my stops even lower to where this shoulder is, because we're expecting this to be some sort of head and shoulder pattern. Now, when you're trading multiple contract standards, but I would split some of my contracts here. Maybe 5 of my contracts will stop here, 5 of my contracts will stop here. So I will never lose. Now this is just trade and management, risk management along the way as you grow into larger contracts. This is what you need to do. You need to learn to fine-tune your stop losses and also adjust your trades, but you realize it's always according to structure. Now, once you have structure, it's much easier to plan your trades and fine-tune your stop losses. So as a beginner, remember, focus on your entries first. You can have 0.3 stops, that's fine, but this is not endure your entire trading career. You need to reduce this as much as possible. 0.1, 0.15 stop losses are like a margin of error. Now, as you get better, your margin of error reduces, comes with practice, but 4*30 point there is all right. Always have a stop loss right. If you have 0.1 as a stop loss, when you're a beginner, you're going to get stopped all the time. You can't focus on entries. So one thing at a time. Entries are quite important. As a beginner, focus on entries first. Focused on protecting your trades, focused on stress-free trading, focus on taking decisive profits as a beginner. You need to do that. Now, as you grow more seasoned, you adjust your stops accordingly, protect your trade, fine-tune your margin of error. So first trade, it's like that. Now, the second trade I took, same thing here. Now, this was a very difficult trade to take. You're a beginner, you probably didn't get this trade right. That's because adversely, it's a very lopsided, very lopsided structure, and it's only moved about 1 point, just the 1 point move here. Especially if we took it under yellow, it's only 0.5 point move. Now the same thing again, I took the trade at this green candle here. Especially I had this rejection of this pink level here. So you see, reliable levels, very important. It gives you a lot of confidence to enter certain trades, right? So I saw this long rejection. Let me just zoom in so that it's easier to tell. Forget this is 1 minute chart. So I had a rejection of this engulfing red candle of this pink level and this green candle forming. I took my puts right here, and now I put my stop loss here for a start. But once I saw these 3 top wicks here, I could safely reduce my stop to just above peak. Now if you take a look, this, you realize my stops, it's only 0.2 move, right? So with the 0.5 delta, it's as good as 0.1, especially if I entered into a good fill right here. With this green candle, it's even less than that. So I entered here. Now likewise, we are expecting it to break through yellow because we are looking for some sort of rejection of the level, but this wasn't that clear cut, right? You realize that this structure is not that clear. It's not the best structure. We had a selling channel to guide us anyway, right? So in this case, I took profits, stick profits, and the last one just stopped out once we exited the selling channel. So a profitable trade, even if we are going against the trade right now, think about it this way. If you took calls like this, your calls are going to survive, right? So sometimes you have to take puts because the feedback, as I always say, it is much faster. Within less than 5 minutes, I could put in one trade, another 5 minutes, I put in another trade rate. That's 1 point move. But if you took calls here, you would have to wait for about 2 hours, 1.5 hours, just for 1.5 point move. But I've already made 1 point move within 10 minutes with instant feedback. So sometimes in a trade, it's not about what the direction that the chart is going. There are a million ways to trade. You just have to find one that is suitable for you, for your trade. In this case, puts in this market goes down quickly. I expected this. It confirms the structure quickly. So sometimes I go for puts more than calls in this market. And now the third trade here that we took, and the orange here. Now remember all these rights here in the Discord. Please review them. I took one here at 10:46. Once we had a rejection of this orange, likewise again, reliable levels, right? rejection of fish, especially all this weak set. Protecting it, right? We took some puts here, 1046. Likewise, again, I took my puts here. I have my stops here, and I could actually lower my stops a little bit more because this was a clear rejection. So in this case, I could have half of my contract stopped here, half of my contract stops here at this top here. So I reduced my risk, especially if we break structure. If I took 20 contracts, for example, 10 of my contracts will stop here, 10 of my contracts will stop. So anyway, once you take a trade here like this, right, this is a good trade. It goes all the way down. I took all my profits. Now I got stopped early for this trade here. I got stopped completely about once this large candle comes in, and that's fine. Now if you call runners small runners that you left open, you can just put them here like this. It's fine. You can put your stop loss where it breaks even, and you'll probably survive this, but otherwise take your full profits, right? Sometimes I'd rather take the profits. So what I would do is I will take the profits of that and I will pad it as the stop loss for the next trade. So in this case, this candle rejects the orange, right? That was our previous structure. We knew that this orange is going to be a strong resistance. So once it rejected here, I re-entered my trade right here. So you can see how I re-entered this trade here with some conviction, because previously that's what we planned for. We took some profits. I used that profit for stop loss padding here, and we took a trade here, and right here you notice that there were so many topics here. That's there are supplies on that formed. I put my stop loss above orange, so I had more liberal stop loss. So taking profits early is a good thing as having a runner, but the conviction has to remain due to the structure. In this case, I took my trade here. I wrote all the way down. This is the best trade for the day. I was done for the day by then. Obviously, we had more trades to take. Write another trade here. Now, this is one difficult vote. Firstly, because we started the chop, and you'll notice there isn't much confirmation here. We only saw some sort of rejection of these levels here, and you realize my entry, I took my puts only after it broke through this buying channel, which was here, this green candle. Now you realize puts on green candle, you're probably going to have a better feel, and I didn't have a good feel there. I put my stop quite near here. Now this is probably if I fine-tuned it at 0.1 stop, and we started chopping even though we were out of channel. So you realize I reduced my risk here at around 111. Right here I took profits here, partial profits, because that's what the structure demands. Now if we took a look, it's only 8 cents. It's about $8 per contract of profits. You take it anyway because there's a risk here. So I reduced my risk here, and that helped me. So I also ensure that my break even is attained. So it's all right. Don't look at your entry. If it's $8 profit, take it per contract, of course. Now, so in this case, you reduce your risk because you realize that the feedback is not immediate. I reduced my risk, reduced my position, and we came down because we are there to this selling channel that we started chatting, and we are there to that. I took most of my profits once we reached this near to this yellow, because that's where the structure demands, right? We were expecting that this will turn into some sort of strong support here. Took most of my profits here, and my last contract got stopped of this channel at about 123. Once we broke this channel, it was stopped. So you noticed it's all about risk management here. So even if it's difficult trade, in a chop you would have good trade structure if you have good trade management. My risk is very low. We will have a good feel, but yet you can always find a way to profit from this. Now this is tiring, so sometimes you want to be looking for better entries, but the truth is there is always money to be made if you're patient. If you can't see the structure, if you don't trade with PI, now if you know where your entries, your exits, as well as where to reduce or increase your risk. Now lastly, I made a trade here. Now that will be the trade that will never lose. So I started selling 380 puts. So this is known as short strangle. Now it's a short strangle only because the delta attends towards the short end. What happened here is that there was going to be a chop, right? So we expected the chop here. We tried to earn from all the decay and we knew it was going up or down because this can't last forever. This chop here, so regardless whether it chopped, I'm going to make money. Now whether I broke up or I broke down, now my short leg and my long leg will each other quite effectively, and I was down maybe $20 per pair of contract. Once this chart headed up, by the pair of contract I lost $20, but my overnight time decay that I will earn from selling these options at $200. So this is one of the 10 risk rewards, so it's pretty worth it. So it's quite a good trade here. I would never lose if I took this trade here. So I documented all these trades here, and this was the trade number 6. Sometimes you have to trade accordingly to what the structure and the situation demands. Don't force a trade. Now the best trade would be here. It's actually a good risk reward here. I missed this trade, but I couldn't wait until 3 p.m. to start taking a trade, especially the risk of power hour. And sometimes when you're dealing with the multiple contracts, maybe if I'm trading a few $1,000s, fine. This is probably okay to take, but you know your willpower will be drained, your energy and focus will be drained. So sometimes you have to turn to trades that are less risky and you can take away some of your risk. And therefore the chart headed up here. So now what does this entail for us today? Now let's take a look at the 10 minutes chart here. Now we were buying channel yesterday. If you see that we were buying a channel, in a channel, so this buying channel, I will pay attention to that later. I charted in a 30 minutes and it's relevant. I will chart it later to the 5-minute chart. Now because it will be a little busy and too cluttered, but we'll see if this 10 minutes chart, this buying channel, will continue to serve its purpose. Now yesterday I also mentioned how it's acceptable for the chart to trade up to 390 here to close the gap, because this is the trading range here. So now our objective is to get in position from now. If we knew that this is a checkpoint of the ranges here and we have another range at about 401, and currently the bottom of the support here is 380, notice this may be a good place for us to be taking some straddles here in the middle of the range. So if we open near 390 here, it will be good if you take a straddle. Take a call, take a put here at 14 days at least, right? We want to be seeing where the chart will be headed to, up or down. So I think this is possibly a gift from the market. If we are opening right here, you can get into the straddle here. That is not too bad, but it's not the best trade. Now straddle means that you take the same strike right at this level here, maybe 307 calls and 307 puts. Now when you play a straddle, you need to know what you're trying to do. Basically what you're trying to do is when it breaks through a certain range. So for in this case, now let's assume we took it 390, we have a range at 41, we have a ranger at 381. We took some of the straddle here. If it breaks through this 401 range here, you cut your losing leg, you let your reading leg run. Now this range is a little large. We're assuming a 10-point day for us, so it's a little larger. You may have to cut off your losing leg halfway and let your winning leg run solo for the rest of the possible ranges, and this is why we need to make longer. So in this case 14 days. Now this is there are some risk involved in this. You have to understand your risk. If you don't know how to trade straddles and struggles, I would suggest you paper trade them first. Plenty of opportunity to do this, but the point is simple. We are trying to benefit from two things by getting into position, and the first is to benefit from the IV. Now the IV is going to spike with more uncertainty before the power well. So if you get into position, the IV increases on the day itself. You benefit from the IV. Now second thing we benefit from will be the large intrinsic movement of the chart. Now this power well is going to introduce 100 basis points. Then we are certainly going to hit down below 380. So if we head down into a range here, your puts are going to print and your calls will protect your puts up to a certain level where you know the range is protecting the put. So in this case, once it breaks through the certain support level here, you cut your calls, you leave your puts to run. So this is where you put run solo, but your puts are protected at this particular range by your calls here. So it's a good as stress-free in some way, but it's only stress-free if the move is a large one, and you can cut off your losing leg at the appropriate and the right time. So there's still some ways you need to practice this. Now a straddle is not as good as a strangle in my opinion. So how do we take a strangle in this case? A strangle is where you have ranges involved. So assuming that today we trade within the 390 range, which means that we trade below 390. Now we trade below 390, what we do, we take a put here, we take a call here. So we are assured about 10 points range between our puts and calls, and we will never lose. Some strategy, if the puts go below this, you can cut your calls and you let your puts run, and your puts would have already run 10 points before you cut your calls. So there is also a possible strategy in this, but that's assuming that we trade below 390 here. So today, one of the ways we can do this is to take a straddle at the opening now. That's assuming we trade, it will be better we trade nearer 390, that's the top of the range. But if we don't have the luxury there, we trade above 386, well, we can open a straddle here. It says it's better than nothing, so open a straddle first. But I'm looking to play strangles, and strangle means to take puts as high as we can, and if we head down, to take calls as low as we can. So I want to be seeing this orange get rejected. Well, yesterday I was looking for this orange getting rejected. That was the last trade of the day here. I want to be seeing orange getting rejected here. Stop hunting if we trade back under orange, but at the end of the day we took some puts. I think it's working well right now, but you have to be careful, because as I mentioned, the charts will still be moving to 390. That's the top of the range, which is exactly possible, and pre-market is never indicated. So I want to be looking for the chart to trade on the orange. Now if orange returns back as some form of resistance, that's possible if we see some sort of stop hunting, right? So we see stop hunt here, and we see orange return back as some sort of resistance, and this is what we get. Right head and shoulder will head down again. Right head and shoulder patterns, I love it in this period of time, because it just encapsulates what the market is going through. Now rejection of levels and flagging of shoulders, choppy action and rejection of levels. This is why head and shoulder appears so often, so take advantage of it as it keeps appearing. Now I have a head and show the form we break through the buying channel as well, and that's great because we still form some sort of flag. So that's great. Let's create a head and shorter forms. Now if that forms here and orange turns into some sort of resistance, this is where you take your strangle for the puts. Like yesterday, he took some strangles here. That's good for you, and later maybe at the end of the day we do trade below here. You take the course of for your strangle leg, and you will complete the strangle here with some points in between to protect the trade, and you'll be stress-free towards. Now this is with assumption that we trade under 390. Now in the event that we trade above 390 today, and this is why we open the straddle first, at the open, if we can as close as 390 as possible, you open the straddle. Now in the event if we trade about 390, we want to see if 390 or 388 form some sort of support here. Now we rely to do some sort of support here. We push up right here. Now you can consider calls here and puts maybe later in the day, especially we are counting to follow this. So first thing first, before you load up on your puts, we want to see if it's a possible head and shoulder here. If it's not, and this continues to follow some of buying continues, and this continues to be some sort of support here, especially this orange here, and then you may be having to take a strong calls early and we trade above 390, then we will take a calls and puts later in the day, so you want to see how the market reacts first. But I'm looking out for this orange to turn into some form of resistance, so it's important. I think it's quite a good gift if we open right at the center of this range here from the market. Just open a straddle first. Now straddles are not that profitable compared to strangles, but you know they get the job done, especially if the IV is going to spike and if we are going to move massively after Wednesday, which I think we will, because we are going to have a summary of economic projections for that meeting, and this is going to prepare us for the next few months worth of guidance. So it's going to be quite an important meeting that is going to bring us out of the ranges. So I think having a straddle here may be a good strategy. Now straddle means that your calls and your puts are hedging each other as you open them, so you cannot rush the trade. No market orders. Please make sure you have a good as good feel as you can, because they are supposed to hedge each other no matter where the market trades, so that when you close them together your losses will be very minimal if the IV does not go the way it should, and if the chart doesn't travel very large distance. So they are supposed to edge each other. So this is one of the benefits of opening a straddle. Now what makes a straddle profitable is where you exit your trade, so you need to be very clear on where to cut your losing leg, and that's with a good understanding of the trading ranges. So do practice the straddles if you want to. If you still need to on a paper a trading account, but anyway, I'm looking for this orange, right? I'm looking to place struggles. I opened some puts yesterday, so we'll see how this goes. I have put my select ready. I'm looking for some of my colleagues here, so I protected my trade early here. I have some profits up from here, so let's see how this turns out. Whatever power is going to say tomorrow, the market is going to whip. So that's just the truth, and this is why we are trying to get in position as much as we can. So today's objective, let's just get into position as best as we can so that we are stress free. Now yesterday there is an opportunity to get into a position already, and so I think that's not too bad. If we put puts here, we've got puts here that's still open but protected. Let's see if we trade below orange here. I'm looking to trade below orange, but if we don't, this turns into support. That's not a problem. Try finding the position. Yesterday's high, where we can open a straddle, that is actually 390. Where we close the gap here, that's the best place. So if we open 388, possible to open the straddle. We shall see how it goes. So thank you very much for watching this video. It's a little longer than usual, but thank you very much. Please remember to subscribe to my channel, and see you in my next video. You can also comment on what you want me to talk about next.